Right, good morning to you, Louis, Zimain, Allison, Karine, Allison, Claudia, Chu Sing, Dennis, Jake, good to see you guys. Happy New Year to all of you. Peter, good afternoon, good morning to you, Edwin. All right, now today is the 31st of January 2022. It's a Monday, and of course, definitely, so my wife is asking me why am I still working today? Because today is a Chinese New Year Eve, all right, 2C, right? So of course I told her that okay, today I will work, tomorrow and the next following day I won't be. Okay, that's the reason why I decided to do a very impactful MAO for you. So do note, Tuesday, Wednesday, there will be no MAO. All right. Okay, I'll see you back on Thursday. Now, of course, what's happening right now is that Joe Biden is definitely having a bit of problem with the current rating, which is very critical for today's sharing. All right, I'll talk more about the data. And of course, we have the tension in Russia is definitely building up. And of course, the crude oil prices, the energy prices is actually taking a toll on the market. This is something very dangerous for all of us. If you remember what happened in 2008, and also remember what happened back then in some of the Gulf War in 1990, is actually almost the exact repertoire. All right, that's why it's very critical. All right, and of course, Elon Musk itself, right? His Tesla came down nicely to my technical level, 799, and rebounded. That's a pretty good one. So we talk about all this later today. But today, the main caption is this: is Biden instructing Federal Reserve Jerome Powell to act ASAP? Now, I have my reason for doing that is by sharing this. I'll share with you more in details later, okay? Now, before we start today's MAO, do once again understand this disclaimer applied. Do understand my job is not just to entertain you. My job is actually to share stuff with you, okay? I will really want you guys to really understand where I'm coming from. I just want you guys to make money. I don't care what people say about me. I don't care what people say online about me. I don't care whatever. To me itself, right, end of the day, as long as I live with my conscience clear, I know what I'm doing and helping a lot of people, I know that I'm having a good life right now, then that's more important. Yeah, I believe that you share the same thing too. All right, thank you very much. Now, of course, today is 2C year. I have to wish you guys 恭喜发财. All right, since tomorrow I will be meeting online, I'll definitely wish you now today. Right, I wish you all the best for 2022 and beyond. All right, may all the good stuff bestow on you guys and may us what big time for 2022. But of course, like I say again, in the early start of this year itself, in January, when I was calling for a sell in the morning, in the start of the month, I didn't get much positiveness from the market in terms of like people like pretty pissed. But when you see the stock market down 15% for the NASDAQ, 12% for the S&P, and about almost 9% for the Dow Jones, right? People start to wake up and say, hey, this guy is actually real. So of course, what is my feel for February itself? I'll share with you very shortly, all right? But before we that itself, right, just a little bit of sharing here itself for people, friends who are born in the year of tiger, monkey, snake, and pig. Maybe this year itself, you need to be very careful. Now, I have a monkey. My wife's a monkey. My mom's a monkey. All right, and my sister's tiger. So I think it's that later on I'll tell them what to do, yeah? Now, of course, if you want to get more stuff itself, right, you can get this, you can screenshot this right now. For those who are born on the year in tiger, okay, you need to do something. All right, for those in monkey too, take note of that, okay? For those who are born in the year of snake, also take note of that. And of course, for the year of the guy that is born in the pig year, also think of that. Now, there's something that I must share with you. Pig is actually known to be the wealthy zodiac sign. So when the pig actually comes in and have this little problem right now, I have no idea how to do this thing, but just this is my personal view. Is that right? If that's the case itself, wealth may be a bit of problem for all of us this year. So in my opinion itself, this year is going to be a very dangerous year. And I believe the first 3 months is going to be very dangerous. So that's why I want to share this with you. Now, of course, the main reason why the market itself is now definitely a bit jittery because there's not only one rate hike coming in. It's not even 2 rate hike, not even 3 rate hike, not even 4 rate hike. My goodness, now they are looking at potentially 5 rate hikes coming in. Now, this is really very scary because how on earth can you have 5 rate hikes in a single year itself? Because first of all, the market will take it, right? But the thing is, the market is pricing in itself. So you can see that on the 10th of January, Goldman Sachs says that there could be 4 rate hikes. Oh my God, okay. Goldman Sachs on 10th of January this year said there'll be 4 rate hikes. Then after that, yes, this morning from our own very own Straits Times, there could be a potential of a rate hike by 0.5 point if needed. That means that, right, there is an ongoing speculation there that on coming March itself, this about 2 months from now, the rate hike could be at least 50 basis points. That is very high because we have no rate hike for the longest of time, and suddenly now we have a potential 50 basis point. Is it because that we are behind the curve, or because the market thinks that this is very important? And of course, the Goldman Sachs again today came in through Reuters, says that now they're looking at 5 interest rate hikes. Oh my goodness, are we mad here itself? I don't know, but this is what I get from the mainstream media, and obviously it sounds like this is likely going to continue for quite a while. Yeah. Now let me share this with you. Very important on my view right now. Let's take a look. Okay, the technical side. Now on Friday, I was right and wrong. I was right because the market went down. I was wrong because the market went up by closing at a high on Friday. Now, what actually happened was because there was a $65 billion buyback program, and that was actually something that was in a circular recently itself. And that means that it's either that Friday and today, there could be more buying in the US market because of this $65 billion buyback program by some of the mutual fund, trustee funds, and those 401k. But this is a very normal thing that happened in January. But the question is this, will this actually last the market or this hold the market? So now from the trend, you can see that there is a very strong support at about 43.20 level. Okay, 43.20 level is a very strong support, and the market has basically stays above it. And of course, we can see that the market, the trend line itself also confidently stays above it. So now with the huge volume traded the last few weeks, all right, there is a form of 2 camps. The bull camp believe that the market is going to go back up again, and there is a chance of seeing 4,500. Okay, there is a chance to see 4,500. Okay, now on the other camp, which is the bear camp, they believe that this is just going to be the last recovery before the market goes down to 41.50. All right, so now I want to show the consensus here itself, everybody. Now, those who say that you'll go to 4,500, please key 4500. For those who think that's going to go down to 4150, please key 4150 right now. I want to see today with 64 people online right now, what is the numbers that or the consensus view at the moment right now. Please, everybody, please key the number now. I want to see your numbers. All right, like I say again, it's a very good thing to have this little sharing here itself so that we can actually learn from one another to see what's going on. And of course, we also want you guys to benefit from this, yeah? Okay, numbers are coming in. Okay, there are numbers coming in, and it seems to be that more of you guys are looking at 4,500. Okay, so that's why you can see that's the thing here. The consensus are pretty important to us, so we can really gauge the market, yeah, at the moment right now. Okay, 4,500. Okay, so you can see that majority. Wow, even I see Terrence actually saying 5,000. Okay, okay. So that means that now suddenly, because of the last Friday turnaround, and obviously very clearly the market has tried to surface at the support. Now, basically the consensus is changing. This is how market works. If you remember, just 5 days ago, when the market was, 2 weeks ago, when the market was plunging, everybody was looking to sell. But I said that, guys, buy back some of your position because I suspected the market will rebound. And truth be told, the market really rebounded. But the thing is, previously that everybody was looking to sell. So now the price has went up. So they changes consensus immediately, and this causes people to think that this is going to be the recovery. Now, of course, again, there's two sides of a coin. People are bullish, people are bearish. I will leave it to you to decide, but I have my own view and I'll share with you later. All right. Jimmy says a bull trap, and Fred say 4150. Even Freddie also say 4150. Okay, interesting. All right, so I will leave it there. I will come to that later itself. Okay. Okay. All right. Now do note again. Let's take a look at what happened on last Friday. Now, last Friday, I given you my fair view on Tesla. And I told Tesla fans that, look, if you really want to buy Tesla, buy at 799 or 792 or 794. I mean, either you buy at the 799, the level that I prescribed, or you can try to squeeze the market to 792, or you can try the absolute low level that technically it could go down is 794. Right, remember that. For those who remember that I was spot on Tesla, please now key the words Tesla spot on, because what happened? Take a look. Tesla really came down all the way down to the low. The low was perfect, my goodness. The low was 792. Oh my goodness. So Tesla shares came down all the way to 792, and then it rebounded strongly and closed as 846. My God, $50 rebound. And obviously, did I catch it? Yes, indeed, I did. Because I mean, the thing is there's no point that you predict something and you don't follow through with doing that, right? So that is absolutely brilliant, and I'm very happy that Tesla fans thanks me for that. Say, hey, Kel, great job, you picked the bottom. I say, yeah, but I will say something here on an extra note round. Everybody, do take note itself. Is that Tesla, although it rebounded pretty strongly, but surprisingly, the volume did not go as high as it should be. Now, if the volume was higher than the previous day, then I will tell you that likely this is a good time to look for a intermittent recovery. But the thing is that with the volume slightly lower than expected itself, right? I would like to say this, guys, be careful at 877. Be careful at 877 because 877 will pose a form of like a support and resistance, right? It was a support previously, you can see that, but when it broke below 877, the thing plunged down, right? So now, on technical analysis, 877 will become the resistance. And if the market doesn't hold, now that could turn it nasty. So that's why I say this. If you look at it right now, everybody, Tesla fans, I'm not going to say that it will crash, but I'm saying that if 877 cross, we are all safe, all right? But if 877 failed to cross over, or it touches it and rejected it and come down, then this time round, the market may dive down to 760, okay? 760. So be very careful on this Tesla, okay? And of course, if Tesla goes down, most likely all the EVs will be going down. And obviously that will lead to a cascading effect, a domino effect in the market. So watch out for this, Tesla fans, okay? That's my personal view, okay? Yeah, thank you very much for those who go in the spot on for me. I really appreciate that. All right, there's some incoming calls right here now. I'm telling them I'm having MAO right now. I can't pick up that call. They thought that today I should be free. Yeah. Okay, hold a minute. Yeah. Sorry for this. Okay, done deal. All right, now that is Tesla. The other one that really caught another attention was this one. That is the silver price. Now, I mean, I am a very bullish guy in gold, but I did say that 3 weeks ago that gold price will be coming down because of the very critical problem with the interest rate environment. And I say that right, once the tapering began, that means that the reduction of the dollar in the market, the dollar will increase, the demand will be there. And when the demand is there, the gold price will come down. I know that when I said this as well, it pisses off some of the gold traders because they're looking at higher level, but I say what I need to tell you. And unfortunately, I was right. So the thing is this, the price came down. And I did say that for silver traders, be very careful that recently the $24 will not hold. I remember I said that, right? I said the silver price will not hold. And I did say that silver price will come back down. I'm going to say this up front again. It will come down to $21.98 in the time to come. I'm very pretty sure that this time around it might be going out to 21.98 because that is my technical level. And of course, did the market really follow through? Indeed, you can see on last Friday, the silver price came down to $22.19 approximate, and now it's still going down a little bit lower. So guys, be very careful. Silver has more downside to go, right? So again, I was pretty okay with my silver. Can you keep me doing a favor? Can you do a silver spot on for me? That will be the most lovely thing to do right today. All right, thank you very much, guys, for doing that. I really, really appreciate that. Thank you. Okay, all right, so that is silver for here itself. Okay. Lots of messages coming in right now, and many people asking me what's my view on the market. I just text them and say on MAO, come online and watch it yourself. Okay, it's easier. Okay, all right. So the thing is this, guys. Oops, sorry. The thing is this. We are. Wait a minute. I think I got some. Okay, wait. This is the old slide. Okay. Okay, here we go. All right. The thing is this, because tomorrow and Wednesday we do not have the MAO. So now we're going to do the forward. Okay, we're going to do the ADP non-farm payroll employment guessing. All right. So now we have today. There's no data. But tomorrow, ISM manufacturing PMI is looking at about 57.5. The jobs openings are 11 million now. We are spending more jobs available than the people demand, because a lot of companies are not able to get people coming in because no one wants to work. The problem is because no one wants to work, so it creates a big problem here. I'll share you more in detail shortly. It's very important to listen to that later. Now, this coming Wednesday, we will have the ADP number. Now, this is pretty scary. Everybody watch this. Now, the last ADP, when the market was looking about 400,000, it came out 800,000, double the amount, right? Now, look at this time now. Oh my goodness, look at it. This time now, the forecast is looking at 208,000. Now, that is a real nosedive. That is a dive of almost 75%. Oh my God. So I'm not too sure how the market is taking this, but it's definitely a bit of scary though. So maybe the last time itself, the market did not really take it seriously, but that's why the market came off. All right, so the thing is this, I don't know what will be the number. It's going to be fun this time around. I want you to take a look right now at 208, and I want you to take a look at the chart over here. You can see the market bouncing up back then, so not too sure why it happened. So guys, now guess it right now. Now it's open to both TWB students and public members. As long as you guess it correctly, you will win 26.88 ADA coin. Come on, guys. Now, I give you 30 seconds time to key in your number, your guess. Now, it has to be precise. It has to be precise. That means that you guess, 550, then it has to be 550, okay? Now, what if there's 2% the same number? Then they will share the price, the pot itself, okay? So 26.88 is our largest pot that we are giving out for the last, we have been doing this thing for the last five months, I think. And 26.88 is the biggest pot ever. It's just like our total is hitting like 8 million, 10 million pot, okay? So anybody can guess it. Like I say, wow, the numbers are all coming in very fast, okay? Anybody all can guess it. You can do it, okay? But only one chance only. And the winner itself, we will announce on Thursday during the MAO, okay? Thursday MAO, then we will announce, okay? All right, so let's just see right now, how's the number, right? We are down to the last 15 seconds, right? 15 seconds right now, okay? Okay, last 10 seconds. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, that's it, guys. Okay, all right. So let's just see. Wow, there's so many of you guys participating today. Now, my personal number, I'm just going to give a random number because there's no way it's a very big difference there itself. Okay, my personal number is this, okay? 334,000. Let's see whether I'm right or not. Again, like I say, this is a very huge, a huge range there itself, because the previous was 807 and this time on the forecast is at 208. Oh my God, 75% lower than the last time itself. Now, do note the initial jobless claim on Thursday is not so bad. At least they're looking at slightly lower. That shows that some positiveness. But the non-farm payroll, they are also looking at a lower number. All right, so this is going to be interesting though. Okay, so we will see how and who will be able to win this prize. Wait, okay, all right. Just give me a moment. There's messages coming in, really coming in huge. Just give me a moment, guys. Just give me a short moment to just reply this. Now, someone asking, so what do I feel about the Hong Kong market? And this morning, I already said that Hong Kong market today most likely will be higher. Because why? If you don't know what's going on in the world, you must know that, right? China Winter Olympic is going to be starting this week too. So which means that, right, there's no way that they will allow the stock market to come off too much, at least for the next few days. That's the reason why you can see the China stock market now is going up. You can see the Hong Kong market is going up. So all these are very simple, straightforward stuff that you should know, that usually in a festive fever like today, Chinese New Year, you don't expect the market to really be a downer unless something very very bad happening around the whole world. So this is actually a kind of like a no-brainer. So that's the reason why I can receive a lot of messages coming in right now asking me how's my view on the market. And I say that, hey, this is not too difficult to know, right? Okay. All right. So that is what's happening right now in the market. Okay. Thank you very much for asking me the question. Okay. Now let's look at Friday's market. Now, Friday market was down initially by 400 points. The Dow Jones was down by 400 points initially. Then after that, there was a recovery all the way to 34,400, and it dipped below. It dipped below to the negative level for a short moment. Now that was where I take a rest. I was too tired. And then at 3 a.m. sharp, okay, the market came in and a strong buy up all the way to closing. Now this basically shows you that there is a lot of funds still available in the market, and January is usually the period of time whereby fund managers, the mutual funds, the 401k, they will come in to buy. Now, of course, maybe they do know that there's interest rate environment, but because they still had to put the funds to work so that they can actually use the money and also get their bonuses. So that's the reason why you can see that the last hour of buying was relentless, it's vertical. There was no reason, and obviously itself is that's what happened on January month. So there's something that we know, and of course you had to take note of that, yeah, people? Okay. All right, so with that itself, right, you can see that the Dow gained more than 500 points in the best 2 days of 2022 to wrap up a wild week. Now, how wild was it? It was basically itself, right, the market was down and before it closed up. And of course, the main reason was Apple share went up by 7% after the stellar result. And more important thing is that for them, Tim Cook said that they are able to have a better supply chain, which is quite a stunner here because supply chain itself globally, we all know is down. And yet they are telling us that they have a recovery on the global supply chain, which is something interesting. But more important is that, right, now Apple itself, the counter is this weightage itself is 12%. Yes, indeed. Now Apple 12%, the weightage of it. So if Apple share go by 7% itself, right, it's going to hold up the entire S&P 500. And this is something that we all know that is kind of unfair because it's very easy to manipulate. But of course, again, this is what Apple is doing, the #1 company in the world. Now, of course, we're going to have Microsoft, Amazon, Facebook, all right, all close higher, even though they were all beaten up early this week because of their results. And of course, the downside is Chevron is down, Caterpillar is down. I was right on Chevron, I was right on Caterpillar. I said that both of them will be going down, and truth be told, it happened. All right, so this tells you that there is a bit of a decoupling in terms of expectation, yeah? Now, the thing is this, the Dow actually ended the week 1.3% due to the strong rally on Friday. And of course, the S&P also closed up 0.8% higher. Okay, only the NASDAQ is kind of flat, okay? Now, it's been a frustrating week for investors. It's kind of a push-pull type of war between the bull and bear. And this type of thing is like, not seen before. Now, do note, once again, the NASDAQ is down by 15% from its all-time high. And the Russell 2000 is down by 19.9%. Okay, so it's very near to the bear territory mark. So the question is, everybody asking itself, well, will this actually end here? Well, I have two sides of coin. I'll share with you more in detail shortly. Yeah. Now, do take note again that today we have all these earnings, but these are nothing big. Tomorrow we have ExxonMobil, AMD, Alphabet. Now we expect AMD numbers and Alphabet number to be kind of like positive, but negative. That means that the forward guidance itself should be negative. And we have Meta coming in. Now, of course, Meta, it should have a pretty good year, very good quarter for December period. But now with their going to metaverse itself, people are starting to be a bit more skeptical. So that again, there will be some jittery. Now, Amazon hasn't been doing that well. So Amazon will come out their data after close on Thursday. So this one should be the main highlight. If Amazon shares goes down, it will dampen the market. So if you ask me itself, right, that means that Monday, Tuesday, these 2 days, the market should be going up a little bit more, if you would ask me this, but be very careful on Wednesday and Thursday, because that are the 2 days that the market, I think, might be going down. So I'm going to put it to you now, maybe today, sorry, change the color for you. So today itself, we may see a little bit more upside today. Yeah, a bit more upside today. Then Tuesday, a little bit more upside today and next day. And then after that, by Wednesday, there'll be some downside. And maybe on Thursday, the downside could be bigger. Yeah, so that's my personal view of the market the next few days. Okay, of course, again, I can be wrong. I'm just basically throwing out a number here and my guess. Okay, all right. Now there are 73 of you. Thank you very much for today's listening to me. But do share and like with more friends, because we're going to go into right now the very important local news, global news, and alternate market news, and those are very important. And those will be able to help you guys to think about what to prepare for the month of February, because month of January is ending today, right? Yeah. Okay. Just give me a moment again. There's more messages coming in, and I think that I really very clearly have said my personal view on the market, and I think that we could see a little bit more upside today, okay, for the US market. Yeah, so I think you got me loud and clear. Just give me a moment. My messages coming in non-stop at all. Oh my goodness. Okay, done. Yep, okay, all right. So let's take a review on what happened on Friday. Now you can see on Friday market using a TWB system, the opening price was here, and initially it went below the MLP, so that was selling because the KSI was red and was an uptick rate. So we know that the market will sell, and I believe that some of my students sell down to make together the 400 points sell-off. But after that itself, you can see the market rebounded very strongly, crossed back the MLP, crossed back above opening price, and once it crossed the pivot 1 level at 34,548, the Dow Jones continued to rally. Okay, the Dow Jones continued to rally. So that's very important information over here. So you look at the day chart itself, even clearer. The market was ding-donging around the opening price, and then the price started to go down. It went down all the way and below KTR -3. But very critical and very important is that the boys came in to buy. Can you see that? The KSI flipped from red to green, and that was the first attack where the price goes up. Then it pulled back, but it did not go any lower. You notice that this price, when the price came down, the KSI maintained green. Now, many traditional indicators who have pointed downside will call for sell, but not our indicator. Our indicator call for buy instead. So when the price basically start to do this, a color change over CCRY, red to yellow, the Dow rallies. Okay, so you can see that this is why our indicator is so different from the traditional indicator. Yeah, we got the boys so-called footprint, and we know exactly what to look out for. Now over here itself, you can take a look. Same thing again for the gold market. Now the gold market was doing a bit different. Now the gold was below the MA30. 1 minute. Okay, the gold was below the MA30 and MA200. It was all the way below. It was below the MLP. So that's why gold, when it opened, it was a sell down instead. So it was a no-brainer. We know that because of the moving average is all above and MLP is above, it was no-brainer. It was a sell immediately, and the price came down. And of course, the KSI was red. It was uptick. We all know that. Blue bars increment. So all these things basically gave us a sell signal on gold. And that's why friends who shorted gold, they actually made quite a bit of money on Friday. So you can see that gold was moving around the opening price. But once the single yellow appears, and you can see that the KSI jump right here, that means that the market already signified to us that the sellers coming in. And truth be told, what happened? The market just plunged all the way down to KTR -2. Now, of course, after that, when the KSI turned green, we noticed that the buyers came in, but the buyer was not strong enough to hold the market. But you can also take note that the KSI was all the way green. So that's why the downside was limited to KTR -2 after that. So all these are actually TWB system, which you can actually utilize this to trade once you actually got the hang of this. Yeah, okay. All right, so now we're going to go into the local and global news right now. This is going to be very important, guys. Now, Biden speaks to Ukrainian president on crisis on border with Russia intensify. Now, what we know is that this is the Ukraine president, a very young man. He is definitely kind of worried, definitely for sure, with this the Putin soldiers, more than 100,000 around the Ukraine border. Now, of course, end of the day is that people are all saying that why must US get involved? Well, of course, we all know that US involvement is not going to be just for the interest of the Ukrainian. It's definitely for themselves. And that's the reason why this is a bit scary. But of course, there's some ongoing rumor now. It said that probably China is telling Putin to relax a little bit. They have their Winter Olympic, just go slow right now, and then just come for our event and stuff like that. So this is what I'm hearing from all the grapevines and rumors. Let's see whether will this stand. All right, so you can see that now Putin is definitely pretty serious with this current case right now. Now, I want to take a look on this, guys. Now, why do I look at the crude price right now? Because I got something very important to share with you on crude. Now, if you take a look at crude oil, this is the crude oil chart over the last few months. Now, if you take a look at crude oil chart, you can see that recently it went up to, sorry, let's miss the sounds. Okay. The crude oil price went up all the way to about $76 region. Then after that, it came back down, 77 to be precise, or $77. Okay, and then it came back down, right? Okay, then after that, it got support at about $62, and it went up. Okay, then when it hit $72, $77, it became a tussle here before it climbs all the way to about 85. Then after that, it came back down, and once it breaks 77 again, it came back down beautifully to 62. And again, at 77 again, it began to play around there. So because of that itself, right, I can do a bit of projection here. That means that from 77 to 62, we have a range. Now, if the market is to break 77, which has happened early this year, then that means by right, it will go to about $90. Okay, to be precise, it's 89.88, but to like around a figure itself, it'll be $90. That means that, right, there is a chance to actually see crude oil hitting the $90 mark. There is a chance for crude oil to see the $90 mark. Yeah, this is what I'm looking at right now for the crude oil. So take it down itself, crude oil to see $90. Now, why do I say $90 also? That's fundamental reason. Because now, remember back in 2006, this during the Ukraine Crimea issue, Russia actually turns off the gas tap in 2006. And now 3 days ago, all right, Putin threatens to turn off the Europe gas supply again. And obviously, it's all right. This is the one that makes people worried, because if this is going to continue, and let's say now the forces have to really retaliate, or there could be dump any small little firework over there itself, this could actually push Putin to turn off the tap. And of course, when that happens, it's all right, they're going to spring the crude oil price higher, and that's going to hit the market because you don't see that. Now, in fact, last week itself, we saw a sudden spike up on natural gas to $5 per gallon. And of course, it was a trading glitch. People say short covering. They pull back very fast, but that's actually, to me, it's all right. It set the tone of the market. So please be very careful on crude oil. I believe that crude oil could blast past $90. Okay, it could blast past $90. Okay, so that's why now, on top of that, while US is facing their problem, they also have this January Omicron spike that could weigh on the next week data. There's this reason why probably the ADP numbers itself could be much lower than expected, because the White House warned that the spike in the COVID-19 cases in early January could skew the data for next week's job report. And because of that itself, you can see over here that indeed in December month to January month, the incredible spike up actually might be able to actually create a dampener on the job data. So it's more like they're trying to inform the crowd that don't worry, that the data, if it's going to come down significantly, is because of the COVID. So again, it's more of a preparation of people, because if not, it's all right, 800,000 jobs and suddenly 200,000 jobs, it doesn't make a lot of sense here. Yeah, so that is what we are seeing over here right now. Okay. So of course, do note Tom Lee previously, it's not in the same article, it's a different article. Tom Lee did say that, right, usually if let's say there's going to be a peak in the Omicron cases in about 3 months' time, the stock market will bottom out. So apparently now you can see that it seems that the Omicron cases or the COVID cases seem to be peaked around here, and that's really in January. So he's actually quite in tune. So that means that the market could have made a bottom, which we saw the market did recover recently. So of course, let's see whether he's right now. That's means two bottoms here. One is looking at now, the other bottom itself is for 3 months' time, the absolute bottom when people really go back to work. Okay. Now the thing is this, the one that why today I want to tell you more about this Joe Biden, because the key federal inflation gauge, the one that Federal Reserve always use, seemingly now is having a bit of problem. Yeah, a problem here right now. Why is that so? Let me explain this to you, my friends. Now, the thing is this. Apparently, 1 minute. Now, apparently itself, right? The Federal Reserve, this inflation gauge, they use it itself. It's called a Core Personal Consumption Expenditure Price Index, CPCEP, okay, index, not the CPI index. All right, this is the one that Federal Reserve say that must be 2%, and they talk about inflation. But of course, we know that now it's 4.9%. It's double of what they have said to be engagement. So now it's 4.9, it's not double, it's almost like 2.5. Okay. So the thing is this, what is happening right now, you can see the numbers now for since 1995, my God. Since 1995, all the way, you can see that it's below 2%. So it makes sense that no Federal Reserve chairman since 1995 until now will dare to take the stand of inflation. But undeniable and unfortunately now, because of the pumping of 5.6 trillion to total now nearly $10 trillion in the system, the inflation has to shoot up. Definitely. Why? You must understand that it means more and more people, they are actually having more money, but the demand, and the demand is still there, if not increased, but the supply is not there. Because of currently now no one wants to work, that's first thing, COVID ongoing, second thing, and global supply chain issue. So now the problem is this, now you even have money, you can't buy stuff. And because of that itself, the price starts to increase by its own. So now the dollar purchasing power has decreased further. So this is going to be a double whammy, and this could lead to stagflation if the GDP numbers are not able to come in. And that's the reason why we have a problem, guys. Houston, we already have a problem. Now, the thing is this, if they do not bring people back to work themselves to bring down the price, then they have to increase interest rate to the point of painful so that people can go back to work. All right, I'll come to that later itself. So you must understand this today. Now, based on Reuters, I decided to use something that's more mainstream so that, we don't be like, be brought out from. I mean, there are other numbers that's available. I cannot believe in those numbers, so I've used Reuters there. All right, so of course, different rating agency with different numbers, yeah. Now, apparently from Reuters, they're polling recently on the 29th of January, which is just 2 days ago, the 50% of Americans disapprove of the president. Oh my goodness. That means that, right, half of the people now are not happy with Joe Biden. Really. And we're going to have our midterm election coming soon. So with this style of numbers ongoing, the chance of him becoming or continuing in 2024 became a very, very big question mark. And of course, to add on itself, I went to CNN politics. Oh my goodness. Only 1 in 5 Americans thinks that he is a successful president. And even the own Democrat, 1 in 3 feel that way too. Oh my God, that means that 2 out of 3 are not feeling that way, okay? Now, this is bad because why? 72% of the Americans, okay, says that the current economic are either fair or poor. And even a Democrat says that, well, 36% say the economy is good or excellent. So you can see that they're really not really behind the president. And of course, the scary part is this, 89% of the number of Americans who said that the price of food and consumer goods are worse off than today than a year ago. And this is like say that this is very bad. Now, of course, the people, the residents don't like expensive stuff. Now, even though the stock market is doing well, it's all right, but price keep on going higher. Not everybody is involved in the stock market. Not everybody is involved in crypto market. Not everybody price, the pay have increased. Hence, therefore, the unhappiness will definitely come in. Right, I do not want to get in CNN itself, right? It's a politics website, so I'll leave it there. Okay, I won't go into details. All right, so now with all this itself, right, let me explain to you some of the important market information first. Now, technology share recovered last Friday, and that basically avoid the first 5-week losing streaks in 2012. So it was because of Apple, and that's the reason why that happened. Now, if you look at it right now, at the moment, you can see that Facebook, Amazon, Google, AMD, Qualcomm, all of them are down by 10%. And of course, we are not even well, he says something very interesting. He says that market needs a total give up to find a bottom and signal all clear to buyer. To him itself, right, at the moment now, the market is still pretty confident. So there's no giving up. Hence, therefore, most likely there'll be still got buying coming in, and people will buy while the market may continue to go down. So if you believe that only when the market is full of sellers, they are all telling you that they have given up hope, then maybe the market will bottom out. So this is Jim Cramer. But again, if you remember 3 weeks ago, Jim Cramer was so bullish. So 3 weeks ago, Jim Cramer was so bullish. He mentioned that he sees the market going out in January, but now he totally flipped his coin as usual. And this is not new as we have seen before. So the thing is this, he added this comment, which I kind of like pick it up. Recalling the Gulf War impact in the market in 1990s, he added, we used to get recovery on Friday because people would not want to go in shorter in the weekend because, yeah, it's still to be. So he's trying to tell us that, is it a thing about the crude oil? Because that was what happened in the Gulf War, the crude oil price shoot up. So is it a little bit of like telling us something, a hint, maybe? Now, one thing is that while many people got poorer, there's one personnel got richer. So apparently it's not right. Warren Buffett, he actually gained $2.4 billion because of his investment in Apple that went up significantly. And of course, his entire Berkshire has also did well because they are all to value stocks. So technology stocks all came down. That's why we see a lot of people like Elon Musk, Jeff Bezos, Larry Page, Sergey Brin, all of them, Mark Zuckerberg, all their fortune came down a bit due to the pullback on the NASDAQ. So undeniable is that if the NASDAQ do continue to fall, these people will lose more. And obviously that shows that Warren Buffett, being the right guy, tells you that by not buying seems to be making loads of sense, yeah? All right, so you can see that Berkshire, you can see that very clear that it is a very strong stock over here. It was a high back then in May, and then after that it came down. It became another resistance right here as well. You can see on the screen. Okay, hold on a minute. Yeah, right here. And then after that, it became a resistance turn support. And the scary part is this, when the market came down recently, it became the real support. So that's why there is a possibility that the Berkshire stock may continue to go up south to 48,000. This is the most expensive stock in the market, 48,000. If not, if you ever pull back and sell right, 445,500 could be the support again. All right. Now, only if ever the market loses this point, then there should be some real panic in the market. Yeah, there could be some real panic coming into the market. Just be a short moment itself. Okay, done deal. Okay, hold on here. I'm receiving a lot of messages coming in. Okay. All right, so watch out for this Berkshire. Okay. Now, this is the point that you have to get your friends coming in right now to listen, because this is where I'm going to share the alternate market views. And this is the reason why I think that you need to pay great attention to what I had to share the next 5 to 7 slides. Okay, I can't remember exactly how many slides I gave, but just take note of this. Okay, first of all, now S&P 500 had hit to one of the worst January on record. What does it mean then? Now, do note, now, usually the month of January is like a barometer. If the month of January doesn't do that well, usually the market will actually go into some profit taking. Okay, the market may go into some profit taking. So what is happening right now, you can see that they have a list that shows the period of time when January is down, and you can see that the last time we saw the big one was back in 2009. That was Lehman crisis. And the next one itself is this one, this year, right now. So the thing is, if today, if let's say today there's recovery, that's good. But if the market, let's say, pulls back a little bit more, my God, this will be the worst ever January month for the history of the S&P 500. Because now we're at minus 8.35%. And we're just marginally away from 8.57%. Now, this is not going to be good, right? So this is something to be, it's something to take note of that, yeah? Now, do note, since 1950s until now, The S&P 500 have averaged an annual 1.1% after posting a loss in January. So which means that if the month of January ain't good, usually the year itself will end bad. So now, based on 1950 to today, the last 71 years of market data, would you want to fight against it? And the scary part is that on average itself, right, the market pulls back about 13% during this period of time. 13. Now, 13%, how much is that? Let's bring the chart right in right now, yeah, everybody? Now, let's bring a look at the chart right now. Now, this is the Dow Jones, the S&P 500. Now, you can see that now the market is still doing pretty well. In fact, the Dow S&P is trading well. Now, from the all-time high at 48.19, the market came down to the 90th percent. And of course, you can see the market did a very instrumental recovery. And now it's trading higher at 44.41. Okay. Now, if the market is to drop by 15% or 13%, that means the S&P will have to drop down all the way to the level of 40.96. Now, I kind of believe that, right, this could actually be happening. I repeat, I do believe that this could actually be happening. That means the market itself could come down to 40.96. That means that, right, I'm saying that, right, excuse me, I'm saying right now there is a very high possibility that the S&P 500 may be coming down to 40.96. Now, I explain to you in details. Give me a short moment. If you have friends who are in the market, maybe get them online right now to listen to this next 7 slides. It's going to pay great dividend. Now, 40.96. Write it down here. If S&P loses 43.37 support, we could see 40.96 coming. Now at 44.41. Okay, so take note of that. I already keyed my number itself. This is something very scary. I want you to take note of that. I just don't want you guys to think that I'm just writing for the sake of doing it. I'm very serious with this. And I give you my reason very shortly. All right, just stay tuned for me. Okay, now why is that so? Because this is the January barometer, and it has been pretty accurate for the last 71 years minus 12. That means that the last 71 years is only 12 years. It was not correct, but 71 minus 12, that means that it's about 85%. Now, 85% accuracy for last 71 years is something that you don't want to do, right? 83%, okay? So you must understand that, okay? And of course, the problem is that this is the period whereby Jerome Powell and friends is going to increase interest rates, okay? Now, definitely in history, in fundamentals, there's no way a stock market can do that well when interest rates keep on increasing. And with the market now looking at 4 to 5 rate hikes, while in 2021, they were looking at almost nothing at all. This is a very big disturbing jump, okay? And this is the reason why I suspect that things may get even worse. All right, so now some of the data, actually like this guy, this company called Bespoke Investment Group, says that the number of bears has hit about 52.9. That means that, right, okay, there is some form of bearishness in the market. Now, of course, some people say that this is a good time because maybe the bulls going to eat up the bears. But well, with the January barometer coming down in this way, sometime in life, you cannot do it contrarian effect. And of course, in short itself, right, if let's say the AII bearish sentiment goes down lower, usually the market will go down further, okay? So that's why traders be very careful for this January. And if this is going to be a spillover, February could be the start of the potential selling, yeah? That is why I'm kind of worried right now. Now, take a look at this one here, the reason and the most important reason. Because now we have the consumer price index now down from, it was down initially during the 2020 recession, the shortest recession ever. And then you look at the CPI data right now. Oh my goodness, the CPI data, this is the one that the market is using, not Federal Reserve, is at 7%. It's at 7%. Now, the last time we see this was before the collapse of the GFC, the global financial crisis. That is the Lehman time. So that means that, right, when it was going up itself towards the Lehman time, we already entered a recession, and the CPI data was going up. But now we are even higher than the GFC, and yet we have no recession. Do you think it's possible? I doubt so. So now, because of that, think about this as a US president, okay? Now, you know that now the energy prices is going to go higher because of the supply issue, the supply chain issue, the manpower issue, and of course, right, countries are now getting a little bit uneasy with what's happening now in Russia and Ukraine. So all this is going to hit the crude oil prices. So if the crude oil prices goes higher, it will cause a chain reaction with all the costing in all the supply in the market. All right, and that is where it gets worse, because now they have a choice. Now, if you imagine this, you are America president right now. There's two buttons in front of you. Either you do a tapering to create a stone crash, or you do a Venezuela. All right, it means that you take America, become Venezuela, and make the dollar be so worthless and become like, you know, go crazy. So what do you think you will do? If you have two choices right now to press the button, what will you do? Because you know that now the problem is that you have spent about $10 trillion into the financial market, but the market is not reacting. The GDP numbers, although it's higher, but we all know that it's not really the truth. We all know that the earnings are not actually there. We also know that the forecast for the quarter is not going to be good. We also know that the interest rate environment has to increase to do inflation curbing. So now the thing is this, what will you press? Now the problem in America right now, because of the asset growth, many people are not going to work. When people don't work itself, the demand is there, but supply is not there. Definitely prices increase. This is FT, this is like financial knowledge 101. So unimaginable, they have to put a choice to it itself. So you can see that now the US dollar, the value, the PPI is really reducing at a very alarming rate itself, very alarming rate. So that is why people are getting very pissed off with whatever they have, because now their pay did not increase that much, but the inflation is really hitting them. Now the rich people are not feeling that much because their asset actually increases. So think about this as well, right? If your asset, your value, the dollar value decreased by 10%, but your stock market value increased by 10%. So even though that the money itself, the buying purchasing power reduced, but because the asset increased by 10% multiplied by the value of their holding, is still nothing much. That's why to the rich people itself, right, it's actually not going to be that painful. So that means that, right, by right, okay, the lower rung people itself, the 95% is feeling the pain right here. And because of that as well, right, you can see that probably Joe Biden may not be happy because his rating is going down. Joe Biden rating is going down and he wants to continue. And because of that as well, right, with the Federal Reserve now likely to signal a March interest rate hike. Do you know that what happened? If you look back history itself, this back in 2020 when March was there, and then there was the hike rate hike. You can see that the S&P 500 actually dropping down by 15% from the start of March, not the all-time high, but the start of March. So could this be a repeat? Because we are actually seeing that there is a chance that the market will actually repeat a March impact, because that is where Federal Reserve is going to signal a March interest rate hike this year. All right. So that's the reason why I want to show you, recollect your memory, because if you can't remember this sometime in life, you need to get some recall of stuff. Now look at this. This is the current, adjusted PE ratio for inflation, and now we are at 1.67. Now this is a very important chart again, because this is a chart back since 1925. So 1925 until now, we are now at the highest level we have not seen before. So another worrisome problem. And of course, in terms of chart view itself, right, we may actually hit a resistance roughly now approximately at about 1.67. So that's the reason why I kind of believe that, right, if you remember what happened back here itself, that was the NASDAQ crisis, and the NASDAQ plunged more than 50% within the next 2 years. And the last time when this happened itself was back all the way in 1966, whereby the market also had the same problem, and the market plunged more than by 25% in 1966. And of course, the last one we had, the biggest one drop was 1929. That's where the stock market came down more than 20%. So with that itself, right, kind of believe that the market should be able to go down by 10 to 15% rather easily from the all-time high. So again, we're looking at that as well, everybody. If let's say we're going to see this now, the market did came down by 10%. It did. So it's following the general view of the PE ratio. But if the market really goes down by 15%, then it means that the 4096 could be next. Okay, the 4096 could be next. So that's the reason why I want you guys to be very careful as we march towards this. Now, do note, now the market is getting very jittery on the yield curve inversion. Now, this yield curve inversion is not new. We've seen this before. And do note, back then itself, when I was talking about this, it was just before the pandemic. Back then itself, in 2020, I was talking about the yield curve inversion, and I say that the market itself may go into a selling. And before we know that itself, the pandemic happened. Of course, some will say that it's a pandemic that created a market. It's not what you forecast in the economy. But regardless itself, right, we are back to the same level, guys. We are back to the same level. And again, if you're back to the same level, what do you expect to see? Now, very simple. If you notice this, whenever the yield curve inversion happens, this will start the recession. So which means that every time when the yield curve inversion happens, it starts the recession. So I believe that 2022 to 2023, we could see another recession happening again. Yes, indeed, we could see another recession happening again. So I know by saying this is not going to gel well on a Chinese New Year Eve, but I just saying whatever I believe. Because now you can see that the 2-year and the 30-year, the yield itself is really flattening and is coming down at a very alarming speed. So that means that, right, traders are very worried of the current situation right now. So if this is going to continue, this will flatten out the curve and that will invert the curve. And when that really happens itself, right, there will be more panic, there will be more selling, and it's undeniable. It will happen likely in February, if not March. So be very, very careful. The inverted yield curve may send yield inversion. Yield inverted inversion. The yield curve inversion. The yield curve inversion may bring the S&P down to 4096 level. Yeah, I know that by saying all this itself, you may not like it, but I have to share you the truth, whatever I see in the chart. Yeah. Okay. And of course, now this is something even more scarier. It says that, right, okay, there is thing called the high yield corporate bond ETF. Now, do note itself, right, the bonds are really coming down at a very alarming speed. Now, look at it all along since last year or 2 years ago, the bond yield chart, the corporate ETF and the S&P 500 is like, you know, brother and sister. But ever since last year, September, it started to go in a different form. And now you can see that it's so far away. Only recently, the market seemed to like really woke up on this and the selling came in on S&P, right? But of course, at the same time, the yield curve also went down quite significantly. So the question is, let's say if they were to come and meet each other, my goodness, that means that S&P 500 has to drop down all the way to 3,500. Now, I don't think that you will see a 3,500, but maybe a bit of midpoint, right? A midpoint of this. So if you look at it right now, the S&P back then was 43.73 on writing, and this is like 34. Okay, I mean 3,500. So the difference of them itself is about 800. So divided by 2 is 400. So that means that the midpoint itself should be around 39.50. So it's somehow nearby to my target of 4096. So I kind of believe that this may actually happen deeper, right? And I think the S&P may have to watch out for this. Yeah, for this could be a real dampener problem. Now this is the price versus the integrated equity for S&P 500 with the inflation adjusted. Now in short itself, right, you can see this chart since 1925, they move in tandem. They move in tandem very well. So that means the accuracy is nearly 100%. So if let's say now, if the market S&P forward earning really follow the blue line and goes towards it itself, that means that, right, the people, the investors will lose about 10% of their valuation. All right, this is something very scary. That means that if the market prolong the next few years, it may be a down asset. Okay, it will be a down asset. And of course, you can see that the asset stock allocation versus annual 10 years SPX return. It's the same thing again. So which means that, right, if the market is to really follow through, then the year is start to come, the market will be down at least by 2%. So all these tells you that the S&P 500, the stock market itself, is not in the right position, and this could turn pretty scary if, let's say, they really follow the curve, because all these charts from 1925 to 1946, all of them is right until now, and it seems that it works beautifully and accurately, and this is actually telling us that the market itself may not be able to hold too long. All right, may not be able to hold too long. So that's the reason why I'm sharing all this information with you right now. Okay, so traders, kindly take note of that. Okay, so with that aside, right, I want to tell you this is something that I saw it recently, and I will just leave it here for today. Now, usually the stock market will bottom just before the jobless claims peak. So the thing is not the current jobless claim now is not high, but we're going to see back in 2003, you notice that when the jobless claim hits the highest point and then we start to go down, that's where the stock market usually bottom out. So it happened again in 2009, where everybody was telling you that, wow, the jobless claim is so high, but once it peaked itself, the market also recovered. So what I'm trying to say is this: moving forward, I believe that if, let's say, there's going to be any form of recession, then if there'll be a jobless claim happening, increasing itself, right, is all part and parcel of what we expect today. And of course, once it peaks itself, right, that means the market might bottom. So just remind each other itself, if let's say the market go according to plan, the market may sell further in March or even April to May. And if let's say by May itself, you do see the jobless claims peaking, then maybe you just spot the absolute near the bottom of the market. Yeah. So that's the reason why I want you to take a look on this today's MAO, to take note of this extra forward sharing for you to consider. Okay. All right. So with that as well, right, I've completed today's MAO in terms of the global news. Let's go to the chart view right now, and let's see what can we do. The bull goes moo, the bear goes drew, and the flamingo is different this time. Now, first of all, very important, that's why I'm very disturbed today, is the China market. Now, this is a China market, and I said before that once it goes down, it may have to go down lower. Hey, wait a minute, this is not the day, so wait a minute, this is 31st. Yeah, now, okay. The China market itself is trying to recover, but it fizzled out at the last few 15 minutes. Let me take a look right here. You can see that it fizzled out. Yeah, just fizzled out just now, moments ago. Okay, yeah, it was up initially earlier, but now it fizzled out a little bit. Okay, so anyway, my view is this: the market has really came down, hit the technical point, and the technical point I gave myself was this level, and that is the 14,789. This is a BMB. So the market really followed the BMB and went down all the way to trigger this point now at about 14,789. Okay, now of course now it's trying to hold up the market, but if the market do pull back, then the selling could bring it down all the way to 14,300 level, and that will spook the market further. Yeah. Okay, so that is the S&P. So that is the China A50. And of course, for Hong Kong market today, you can see that today Hong Kong is pretty clear. Why? Explain this to you. Now, Hong Kong today is a buyer day. Now, why is that so? Because Hong Kong opens above pivot 1. Now, above pivot 1 is always very bullish. I said that many times ago. Now, once the market came down, you can see it triggered the KCB at 23,500 and then recover. And once it crossed the MLP, which is that 23,686, that is a stronger buy. And of course, all the way it went up. And now it's very near to 29,974. The high is 23,950, missed the MA by a fraction. Yeah. Now, intraday, you can take a look at the movement. You can see that very powerful TA here. What happened is the market basically opened and then went sideways, and then it came down to KTR -2. But once it hit that result, you notice a bomb is there. If you draw the two lines, the imaginary line, we know that once the market crosses above the bomb RL, the market will go up. And of course, the market went all the way up the south and missing the MA30 by 20 points before pulling back on profit taking for the Chinese New Year. So with that itself, this basically tells me why we should believe in our TWB system, even though the market says sell, but we have to follow, yeah, to buy, okay, as usual. Okay, so that is done. Let's look at the Dow Jones for today, shall we? Okay, the Dow Jones today looks positive. The Dow opened above the pivot 1. So as long as the Dow stays above OP, it will go up. Okay, so write it down, this number, 34,627 will be a very important support right now. As long as the Dow Jones stays above 34,627, the Dow will go up. And how high will it go? It may go to the fresh chocolate bar here at 35,043. So which means that this could be a 300 points rally to the upside. Now, contrary to this, if the market loses 34,627, then it will come down to MLP at 34,474. Now, the KSI is still red. That means the selling effect is still there. But of course, the selling has reduced a little bit. So that means that even if it comes down, it may not be a lot. All right, so traders, think of that. Now, there's a very strong stack here right now on the MA, which is about 35,296 to 35,300 level. This means that, right, if the Dow Jones really continue to push up after 35,043, it should be heading to here as well. Okay, it should be heading here. Okay, so this is one thing to take note. All right. Now, just to share additionally about the Fibonacci. Now, if you take the highest point right here and we stretch it down to the lowest point recently, you will notice that, okay, very interesting, the 50%, the 50% mark, okay, is actually this price at 35,043. And this is exactly here itself, the number that we mentioned, 35,043, very nearby to the 50% mark, 35,044. So let's say now, if I will do a hypothesis, that means that if the market is to really goes up, I believe that it's going to go up here itself to actually trigger the 50% mark. You're telling me, will you go to this point? I kind of like give you a bit of 50% view, but if the market stays up to hit 35,043, it's kind of very positive. Yeah. Now, again, I repeat myself. You notice that if the market loses the 38.2, it will also lose the pivot 1. That means the market could bring it down all the way, or at least hit the MLP level. So one thing to note, today's OP is going to be very critical for Dow Jones. Very, very critical. Now, the NASDAQ also recovered today. You can see that it's now climbing above the opening price. It's going to touch the the KCB at 14,515. All right, now if you continue to go higher, it may all the way go down to 14,731. All right, I think we're a great long way up. Now, the downside itself is 14,298. So only if the market loses OP, it may come down to this MLP and a pivot 1 level to find some support. Yeah, there's something to take note of that. At the moment now, the KSI is still green in color, so that means that the buying will be much easier than the selling for time being. The S&P 500 today is also scaling up a little bit, as I mentioned. Now, S&P 500 is now consolidating in this area right now, so you can see the pretty big range. So of course, if the market goes up itself, right, I suspect that it will go all the way to 45.88, okay, if it goes up all the way. But at the same time, if the market goes down, then the market may go down to 40.096, the level that I mentioned. So traders, take note of that, 45.88 versus 40.96, yeah. Okay, all right. Okay, so let's continue. Okay, S&P done, Nikkei done, as a Nikkei now. Now, this morning we have called for a long in the Nikkei. Now, why do we call for a long in the Nikkei? You can see that the Nikkei opens here at about 26,752. Then it came down very nicely. It touches the MLP brilliantly and recover. And because it's above pivot 1, once it crossed back above OP, it was a buy. So again, with the price above pivot 1, it's a very strong indication of further upside. And of course, if you look at the 15-minute chart on the Nikkei, you can see on the screen right now that the Nikkei really came down to the MLP, stopped here brilliantly. It was a bomb effect. So you put a high and low, and then you buy over here. And of course, the Nikkei shoot up all the way from OP mark to KTR +3 to +4. So again, this shows you that our system doesn't need to look at anything else, just follow and trade with it, okay? Now for DAX, everybody, you should know that I'm quite bearish on DAX recently, and it came down. Now DAX do a strong recovery, and today it may continue to go higher. So DAX could go back to the 15,600 level again. This is going to be the main resistance. But if the market fail, then of course there could be more selling back down to 15,032. Yeah. So traders do take note of that. This is the intersection point for DAX. Okay. Okay, let's look at crude oil right now. Crude oil. Now, crude oil, I already tell you my view. Today is a doji directional day. That means the market could go directional. And my target is still $90. Okay, $90 is my target. Now, only if it breaks below 86.78, then maybe it's going to go down to 82.70. So only if that happens. Because I don't think so. My flower will mean this thing will stop here as well, and it's a doji directional day. Very high chance it will be a directional day. It may go up to $90, and that will likely spook the market instead. Yeah. Okay, let's look at gold right now. Gold. Now, gold is still coming down. Okay, let's show you the gold chart. The gold market is still coming down, and I did say that most likely gold will go down further. Now, gold is below the MA30, below MA200, below MLP. So gold price may likely be coming down further, and 1775 could be the next level. Yeah, 1775. Okay, all right. Although my KCX is blinking right now, it haven't formulated yet, so it's no. And the blue bars setting down show the selling pressure. The KSI maintain rate, even though the downtick pressure, but it still be down. So I believe that crude oil, when gold price may come down to 1775 on a spike down potential. Now, of course, if gold price is going down, silver can't be any better. So silver, again, as I said earlier, will be coming downwards to 21.98. Now, 21.98 is actually the same level over here, the KCB at 22.04. So which means that, right, if the silver to go down 21.98 is not a big problem. It may even test today's pivot at 21.82. Okay, all right. Okay, so that is silver, and let's look at now the last two for today is Bitcoin. Now, Bitcoin, I'm very pessimistic on it right now, very bearish. I believe that Bitcoin is going to go down. My view on Bitcoin, it will go down to here again, and that's 34,409 level. So which means that now at 36,875, I'm looking at the Bitcoin to go down by another 2,000 points. Okay. Now, of course, there are people saying that this is no, because they think that this is going to be a recovery soon and go up to 40,000. I say that now it's below MA30 and below MLP, definitely below MA200. I can't see how it's going to go up. So I'm going to stick to my view. I'm going to see 34,409. Okay, so I see. All right, but I know that this one is going to take note of that. Yeah, okay, so that is the Bitcoin, and the last one will be Ethereum. Now, Ethereum, you can see that initially this morning, it went up first. There was some demand on it. Then after that, suddenly the selling came in. Now, Ethereum can't even go to this high at 26,036 because the market at the high here itself is at 20. You went up almost to 2636 and now pulling back down, and it loses MLP. It's below MA30, below MA200. So with that, that means that there is a chance for Ethereum to come down to 24.15. 24.15. Once it breaks it, the market should sell down further. Okay. So likely today, Ethereum will be down today. Ethereum will be down today. So traders again, do watch out for that. Yep. Okay. So we have done the Bitcoin, we've done the Ethereum, and I share with you my view on the market. So to just summarize up itself, I kind of believe that the market may go into some profit taking soon, but there could be some upside first, and the upside could be as high as all the way to 35,000 first before it comes down all the way here. So what do you think, guys? If you think that's the way, then okay, tell me, leave me a memo, maybe a patch. Let me see what it goes. But that will be all for today. Thank you very much for today. I will see you guys on Thursday for the MAO. I wish you all the best. Remember, I suspect today, tomorrow, the market will be up a little bit. And then Wednesday, Thursday, there could be some selling. All right. Wish you all 恭喜发财，万事如意，心想事成. In this tiger year, all what big time. All right, guys. Thank you very much. Have a great day. Happy Chinese New Year once again. All right. Bye-bye. Okay, bye-bye. Hola!